Welcome to today's webinar on corporate and association political activity, key 2020 compliance issues. My name is Jim Call. I'm a partner at Whiteford, Taylor & Preston in our Washington, D.C. office. I was formerly the Deputy General Counsel of the Federal Election Commission. The issues we're going to be covering are on the screen in front of you today. We'll be talking about campaign finance rules that impact corporations and associations. We'll start talking about political contributions and other types of political activities. Pay-to-play laws, which are a special type of contribution restriction that apply to public contractors. And independent candidate advocacy. We'll then talk about the lobbying rules and the gift rules that apply to associations and corporations, and we'll conclude with some updates on issues related to COVID-19 that impact political law compliance. Before we get into each of these issues, let me start off with an overview of the compliance challenge that is posed by political activity. The very same activities can involve compliance with both federal, state, as well as local issues. And on top of that, there may be overlapping tax, lobbying, campaign finance, and ethics issues that could apply. For example, if you had an event where there was a senator and a governor and a mayor and funds were being raised, you might need to look at campaign finance and ethics issues at both at the federal, state, and at the local level. In this area of the law, not only the organization, but sometimes individuals are subject to liability for violations. And it goes without saying that prosecutors and the media love political law violations. They're newsworthy and it draws viewers to articles about these violations. But the key takeaway here as we start this presentation is it's important that these rules and laws do provide opportunities for your organizations to achieve their political and policy goals. And so it's important to understand them, to be able to achieve those goals, and to avoid risks and adverse publicity. So with that, let's start with a discussion of the rules relating to political contributions and political activities. At the federal level, corporations and incorporated associations are absolutely prohibited from making contributions to federal candidates, to federal political parties, as well as other political committees and PACs. When you get to the state level, the laws are a bit all over the place. There are a few states that allow unlimited corporate contributions, and they're listed on the screen. Corporate contributions, and when I say corporate contributions, I'm meaning corporate and association contributions, are prohibited in about 20 states, and in other states, limits are imposed on the amount of corporate contributions. Now, it's important to note that if your organization is a 501c3 organization, then your organization is absolutely prohibited from engaging in any political activity, including making political contributions. This is by virtue of the provisions of the Internal Revenue Code. 501c3 organizations are only allowed to engage in a limited amount of nonpartisan activity, such as voter drives. Well, if you're covered by a prohibition on making political contributions, then the solution for your organization may be to establish a political action committee or a PAC. Now, a PAC is a separate entity for at the federal level. You register with the Federal Election Commission. And what the PAC does, it collects voluntary contributions from eligible employees and other individuals, which is called the restricted class. The PAC is then able to do all the things that the organization cannot do. Can make contributions to candidates and office holders, and can hold fundraising events for candidates and office holders. One of the great benefits of a PAC that's established by a corporation or an association is that all the costs of running the PAC can be paid for with corporate dollars. You don't need to use the PAC funds for that purpose. So, for example, the costs of making solicitations for contributions and other financial overhead costs can be paid with corporate dollars. There are registration and reporting and record keeping obligations that go along with running a political action committee, and whoever is in charge of it needs to become familiar with them to stay in compliance. If you have a federal PAC and you want to use it at the state level, caution is in order. There are some states where you can use a federal PAC to make contributions to state candidates, but there might be separate reporting requirements that apply. There are also a few states where you're absolutely prohibited from using the federal PAC to make state contributions, and you would have to set up an entirely separate PAC for that purpose. So who can give to a PAC? Well, for corporations, the restricted class consists of those individuals that run the organization's business, such as the officers and executives and managers. Usually directors can contribute as well as members of professions and those with specialized training. Corporate stockholders can also contribute to the PAC, as well as the immediate family members of all the persons that I just mentioned. For an association, your individual members, if you have any individual members, can contribute. The association's restricted class, meaning its managers and supervisors and professionals, can contribute. In addition, the restricted class of your corporate members are able to contribute to your association PAC. However, the corporation must give prior approval, and this must be done annually, in order to be able to solicit those individuals in your corporate members' restricted class. And again, in addition to the people I've just mentioned, immediate family members of those individuals can also contribute. Now, with respect to the prior approval needed for a corporate member, it's important to note that a member corporation can only authorize one association PAC per year to solicit its restricted class members. One of the real benefits in the area of an association PAC is that those corporate members can do all sorts of things to assist you in raising funds for the PAC. So an officer of that member corporation could sign and send out solicitation letters to its restricted class members. The corporate member could also use its payroll withholding system to collect contributions from eligible employees and forward them on to the association PAC. The corporate member can even donate funds to cover PAC administration and fundraising activities, as well as donate raffle items and door prizes for fundraising events that are held by the PAC to raise contributions. On the screen in front of you are the current PAC contribution limits, and there really are two types of PAC. Once a PAC has more than 50 donors, has supported 5 candidates, and it's been in existence for 6 months, it can make contributions of $5,000 per candidate per election, and a primary and a general election are considered 2 separate elections, so that would be $10,000 per election cycle. By comparison, you can see on the right-hand side of the screen that before reaching that multi-candidate status, when it's not a multi-candidate PAC, contribution limits are $2,800 per candidate per election, and that amount, as well as others on that page with a star next to it, will be recalibrated every 2 years and adjusted for inflation. A couple of very important things to remember in this regard: that you can't do indirectly what you can't do directly. So corporations cannot use conduit or strawman schemes to make contributions. So they couldn't give funds to an individual to have the individual make the contribution on their behalf, nor could you reimburse the contributions of an employee or any other means of providing funds to an employee or other person to make contributions with corporate funds. The other important thing to keep in mind is that foreign nationals, whether individuals or companies or other kinds of entities, are absolutely prohibited from making political contributions in any election in the United States, whether that's a federal, state, or local election. The individuals who can contribute to candidates or political parties and PACs would be U.S. citizens and lawful permanent residents of the United States, we used to call green card holders. Another important concept to understand is called corporate facilitation, which is a term used by the Federal Election Commission. The concept of this is not only is it impermissible to use corporate funds to make contributions at the federal level, but it is also impermissible to use the resources of a corporation to raise funds from individuals. So, for example, the company's copying machines could not be used to produce solicitations for contributions to a candidate, nor could you use your company customer list as a way of finding people to ask for contributions to a candidate. The cost or the value of all of those resources would be treated as an in-kind contribution and would be an illegal in-kind corporate contribution. This is a very common corporate violation, and unfortunately, it's very easy to stumble in this area. However, it is the area where the FEC has assessed some of its highest civil penalties because of this violation. It's important to note that there are indeed some exceptions that allow for de minimis use of corporate facilities, and that would include, for example, if you were having a fundraiser at your house and you wanted to use your office phone to call to make sure people were going to be attending. The other important clarification here is nothing I said would preclude a campaign from paying a corporation like any vendor for use of its resources. There are a couple of instances where candidates can appear at events, they're paid for by corporations, and it will not be treated as a contribution to the campaign. One example is on the screen in front of you, and this is where a corporation or an association has an event the candidate appears at, but it is only for restricted class employees. At such an event, the candidate or representative can appear, talk to the restricted class, and solicit contributions and even collect contributions from attendees. The company that is sponsoring the event or the association can suggest that those restricted class members contribute, but the association or the corporation cannot collect the funds. That must be done by the candidate or the candidate's representative. Again, for 501c3 organizations, this is not an option since they are not allowed to engage in partisan activity of any kind. Another kind of event which does not have a contribution consequence, even though sponsored by a company or an association, is one where somebody may be a candidate or an office holder, but they're not appearing in their capacity as a candidate or office holder. So, for example, if an association was to be holding a policy forum, an individual who is an expert in that area and is an office holder, for example, somebody might be the chairman of a committee on the Hill, that individual could show up at that event and talk about those policy issues. Now, a couple of qualifications go along with that. There cannot be any discussion of express advocacy for or against that candidate. There can't be any solicitation or encouraging of the collection of contributions. And by and large, that individual's candidacy cannot be one of the subjects of the presentation. But provided those rules are complied with, then there are no contribution ramifications. I'd like to turn our attention to a very specialized area of political contributions, and those are the public contractor contribution restrictions, which are popularly known as pay-to-play laws. And what pay-to-play laws do is they prohibit or they restrict political contributions by state and local contractors and bidders. The contribution restriction may apply to contributions by the company, by its PAC, by officers of the company, directors of the company, senior managers, and in some cases, these laws can even prohibit or limit contributions by the spouses and children of those individuals that work for the company. Now, as I said, these are state and local laws by and large. Sometimes in addition to the restriction on contributions, there are registration and reporting requirements. The real tough part of the pay-to-play laws, it comes because of the potential consequences. It may not just be merely a fine. In some instances, the company's bids can be disqualified. Its existing contracts with the jurisdiction could be voided. The company could be barred from future contracts. Again, it could be subject to fines and other kinds of penalties, and of course, significant reputational damage for violating the laws. As I mentioned at the outset, this is an area where the press particularly likes to follow and write about pay-to-play violations. On the screen in front of you is a list of states that have pay-to-play laws. That is a complete list. In terms of the localities, that's just a sampling of the many pay-to-play laws that have been listed or put in place by states, by cities across the country. It's not an understatement to say that there are thousands of pay-to-play laws at the local level. Now I'd like to turn our attention to the area of candidate advocacy. And here we're talking about communications, whether on radio, TV, or on the internet, or other forms of social media, but communications that advocate for and against candidates. Since the Citizens United decision by the Supreme Court in 2010, there are no limits on the amounts that incorporated entities can expend for communications that advocate for or against candidates or political parties. But those expenditures must in fact be independent. They cannot be coordinated in any way with a candidate or a political party. If there is coordination on the messaging or the content or any other aspect of the communication, then those independent expenditures would then turn into illegal in-kind contributions to the campaign. Now, it may not come as a surprise that most corporations, whether they're privately held or publicly held, most corporations do not want to sponsor independent expenditure communications themselves, oftentimes for fear of alienating their customer base. So the primary vehicles for sponsoring independent expenditures has become intermediaries like trade associations, 501c4 advocacy groups, or super PACs, which are special PACs that are set up to do just that, collect unlimited funds and spend funds to make these types of communications. The big issue in this area is the question of disclosure. The organization sponsoring the independent expenditure communication will surely have to file a report disclosing the amounts it has spent and what it has spent them on. Where the difficulty has become is the circumstances under which the companies or individuals who contribute to that intermediary, when they need to be disclosed. At the federal level, as a result of some litigation that occurred last year, donors who financially support the organization's political activities in general will have to be disclosed in independent expenditure reports that the sponsoring organization has to file with the Federal Election Commission. Many states also require the disclosure of what I'm referring to as the ultimate donors. And states like California and New York and Minnesota, and there are others, require a very vigorous disclosure of the ultimate source of the funds. So the takeaway here is that if your organization is going to be sponsoring independent expenditures, or if it's going to be giving to an intermediary that's sponsoring the independent expenditure, it's important to understand those rules in advance so you are aware of when your identity may be disclosed in independent expenditure disclosure reports. So let's turn our attention now to issues related to lobbying. And I would assume most of the people listening to this webinar know that lobbying is an area that is highly regulated. And the lobbying rules and the registration and reporting obligations differ greatly between at the federal, state, and local level. If you're familiar with the federal lobbying law, you should not assume that the laws in any state bear any resemblance to that at all. As a general trend, what we are seeing is more regulation of lobbying. We're seeing an expansion of the very definition of what's considered lobbying in the states, and we'll be talking about more about that in just a second. There are more disclosure obligations about lobbying activities, more political contribution and gift restrictions that are being imposed on lobbyists, and there are other collateral obligations being imposed on lobbyists, such as mandatory ethics training and sexual harassment training, which has been an issue of growing importance across the country and is now here in the lobbying world. Of course, we're seeing stricter penalties for violations at the federal and state levels as well. On the screen in front of you now is the test of when an organization has to register and report as a lobbying organization under the federal law, which is called the Lobbying Disclosure Act. And without going into great detail, it's a very complicated law, but an organization is only going to have to register if it meets three requirements. First of all, there has to be an individual who makes 2 or more lobbying contacts, and these are actual communications, with a covered legislative or executive official with regard to laws, rules, regulations, policies, and other actions of that nature. And that individual must have 20% or more of his or her time spent on lobbying activity in any 3-month period. Now here, when I talk about lobbying activity, we're talking about not only those kinds of communications, written or verbal with covered officials, but it could also be behind the scenes background preparatory work and research and things of that nature. But the person has to get over 20% of his or her time devoted to lobbying activities. Then the third component is if the organization's expenses related to lobbying activity exceed $13,000 for a calendar quarter. If all three of those qualifications are met, then the organization registers as a lobbying organization, and that individual is listed as the lobbyist. The takeaway on this is that there is this 20% threshold, and for many companies and for many associations, that 20% is all the lobbying they need to do so they can engage in lobbying activity and never have to register. This is a very different system than you see in many states, where one communication with a state legislature, for example, could trigger lobbying obligations and registration and reporting obligations for the organization. So there's a threshold that can be used by the organization without getting into the complicated and time-consuming reporting system. The obligations of an organization that is required to register are on the screen in front of you. There is a ban on gifts from lobbyists and lobbyist employers to members of Congress and the staff. There are a number of exceptions to those gifts rules, and we'll get to those a bit later on. The organization has to file quarterly reports about their activities and their lobbying expenses. In addition, the organization and each listed lobbyist has to file semi-annual reports that disclose the political contributions by the individual or by the organization's PAC and the organization's PAC, as well as other kinds of expenses related to public officials. It's important to understand that since 2008, lobbying reports are subject to random audit by the General Accountability Office. There are potential for fines of up to $200,000 per violation, and knowing and willful violations of the Lobbying Disclosure Act are treated as felonies. Since 2007, we've seen a steady uptick in the number of prosecutions and or settlements by the Justice Department for those who violate the Lobbying Disclosure Act in a significant way. As I mentioned earlier, the states are really pushing out the definition of what lobbying entails. It's no longer just going to the legislature and talking about a law or rule or a regulation. In some states, they regulate something that's called goodwill lobbying, where there's no such discussion of a law or a rule, but the individual really wants to meet the public official. It's relationship building. And in many states, that alone, at that point, the individual has an obligation to register under goodwill lobbying laws. In other states, sales activity is treated as lobbying under so-called procurement lobbying laws. More than 26 states and many, many municipalities have these types of laws where those who are in trying to influence the purchase of products or services on behalf of their corporation are treated just like lobbyists and have to register and report. And finally, in a number of states, interactions with state economic development agencies to get tax breaks and other kinds of benefits, that can be regulated as lobbying as well. Turning our attention to the area of gift giving, of course, gift giving is highly regulated at the federal, state, and local level, and there are oftentimes separate sets of gift rules that will apply to elected, appointed, and career employees. The going in understanding or operating assumption should be that anything of value that is provided to a public official may well be treated as a gift and may be prohibited. Now, fortunately, in this area, in virtually every set of gift laws and gift rules, there tends to be a list of gift exceptions, and oftentimes they're highly specific and they apply in particular circumstances, but they do allow the organization some degree of interaction, whether it's by way of a meal or a cocktail party or providing something else of value to the public official. And there are many opportunities that are presented by understanding and working with those gift exceptions. However, the key thing is to do advanced planning in this regard and finding the opportunities and using them beforehand rather than thinking about it afterwards when it may be too late to undo an impermissible gift that has already been given. By way of illustration, on the screen in front of you are the range of potential gift laws that apply on the federal level. So there are separate House and Senate gift rules, and they do differ in many significant respects. There are gift rules that apply to all federal employees that are enforced by the Office of Government Ethics. In addition to that, for appointees of the current administration, there is an executive order which prohibits them from taking a much broader range of gifts particularly from lobbyists and others who do business before the government. In fact, very little gift giving is permissible for appointees of the administration. I mentioned earlier about the gift exceptions, and on the screen in front of you are just some of the common examples of the types of exceptions that exist. This list is drawn from the House and Senate gift rules, but you see similarities with the federal executive branch rules and also in the states. So many types of widely attended gatherings or receptions, invitations to charitable events may be permissible. Meals or light snacks that are provided as a part of a visit to a site or a facility visit, and all sorts of promotional and commemorative items and informational materials that might be given to an official at an event. All of these types of things are some of the common exceptions to the gift rules. And finally, as we go through this current crisis dealing with the coronavirus, it impacts many aspects of compliance with the campaign finance and lobbying and gift rules and the overall political law compliance of folks who are subject to them. As of the date we are recording this webinar, here are some of the things to keep in mind about COVID-19's impact on compliance. First of all, the FEC cannot extend its PAC report filing deadlines. They are set by law, and the Commission does not have the discretion to extend them. However, it may choose not to pursue administrative fines against filers that are prevented from filing by unforeseen circumstances that are beyond their control. Having said that, there are many states which are changing the primary dates across the country to be later in the year. And if that were to occur, that could would impact the timing of a PAC's pre-primary election reports. So if you think you have a pre-primary election report due in April or May, that in fact may be later in the year that'll need to be filed. Currently, although the FEC does not have folks working on site, the electronic filing system is not impacted, and reports are being processed and reviewed. If your PAC is a paper filer, will be received by the FEC, but they will not be reviewed until regular operations resume. If you need to get in touch with the Information Division or the Reports Analysis Division at the FEC, employees can be reached by telephone for advice. As of the date we're doing this webinar, the federal lobbying reports are still due by the regular quarterly filing deadlines, and they have not been changed. So for April, a quarterly report will be due on April 20th. For those who are more active at the state level, it's important to check regularly with your state regulators as we go through this crisis to see in what way filing deadlines might be changed. It's possible that there may be some grace periods, and in other cases, there may be delays as to when reports have to be filed. If you have any questions about topics we've covered in this webinar, then you can reach me. My contact information is on the screen, and would like to thank you very much for listening to this webinar today.